Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good evening. Ira Epstein of Linn & Associates with your metals market update, and this is for the end of the day trading, or should I say new day trading, because I'm about 5:10 p.m. Central Daylight Time, and we're already into the Thursday trade. I know it's Wednesday, October 10th, but remember, after 5 p.m. the evening trade opens. So the gold market has recovered back to about where the last trades of the day were on Wednesday, and you can see that at 11.98. Silver has not responded to much of anything. You know, you had the stock market down in the Dow 1,000 points on Wednesday, which is today. The market's following through an early evening trade, and if all gold is popping as $4 or $5, I'd be a bit concerned as to what the market's really doing there. We're also seeing early on, look at a big bid in the bond market and the notes. The reason you're getting that is safe havens. When the risk-off mentality hits the market the way that it just did, a couple of markets get a bounce. Often the yen, bonds and notes. We used to say gold, but gold has betrayed a lot of the gold theories recently. Let's go to the gold chart and see if we have anything here. For the week, even with this monstrous stock market break, you've been down 5 days in a row. You haven't done that in a couple of years in stock indices. You're still down nearly $12 for the week. When you take a look at the daily bar chart, you're just whipping back and forth in here. You haven't set up a trend in terms of breaking out. Yes, and I want to make that clear. On here, you would say just sideways. This still has a downtrend. The swing line's got lower highs, lower lows. That's bearish. The market is under the 18-day average, so I would expect to see the pros try to sell into this market at 11.9980 as long as momentum's going their way and a few other things, and I'll show you. Where would they be wrong? My guess is if the market got back over 12.0980, and that's a $1,000 risk on a big contract, they might say, enough. I've tried it again. You don't follow through one way or the other. In terms of Bollinger Bands, which are an algorithm designed to keep the market trading within them 95% of the time, the market's still staying within them. It's not breaking out. They do break out eventually. They'll move out of that sideways action. This case is down. It doesn't have to be. It can be up just as easily. But that's what it's done. And this sideways action didn't just begin. It really was from late August, and it's gone all this time in the market. And if you're watching the gold analysts on financial TV or those that are writing about it, Barron's has an article with one group is bullish. I've seen other groups just as bearish. And right now, I'd say the market is trying to figure out what to do. We have a case where momentum is trying to turn up. The trend is down. The bias is down. I'm still as on the fence post as I was before, okay? In the gold ETF, you're in a downtrend, lower highs, lower lows. The market hit 3 days ago the lower Bollinger Band, and it has rebounded from that 11.90 area up a full $1 so far. I would expect to see resistance at 113.27. If you get over 114.19, I think the pros will throw in the towel and say you're not getting follow through. The bears seem to have an edge in both the futures and this slightly, and I would expect to see some attempts at selling. That is not the case in GDX. In GDX, I'm going to remove today's action. If the market continued down, we had mentioned that maybe you could find support at the lower Bollinger Band. You tell me what you did. You went to 1814, the Bollinger Band is 1824, and you're right back up to the 18-day average of closes. So in that process, what the market did is this low of today at 1820, if we come to this low, that was, let me do this again. This is 1820. This was the next day. This was yesterday, Tuesday. Today's break low was 1814. You made the lower low, hit the lower Bollinger Band, and then came back, and what did you do? If you look at the high today of 1871 that took out yesterday's high, you have an outside day up. The settlement was just underneath the 18-day average of 1865. A tip off this market could be in big trouble, to me at least, would be if you took out today's low on Thursday or Friday. If the market can get over this high and keep going, it's just another sign you're narrowing in these Bollinger Bands and you're really not trending. That's how I'm going to anticipate it or analyze it. I don't know which word I should use. The gold-silver ratio. You're back over the 18-day average. Now, we had just talked that the market, that was the resistance point. You're back over it. Overshooting it a little bit doesn't mean much. The market's had a low recently of 81.31 on the ratio, as high as 84.92, and each time you've gotten over this, you pull back to that 18, you drop down, you come back. It's not really gone anywhere to speak of since the high was made. It's certainly gone a long way up in terms of overall for the year. It made a new high on that whole move. When we look at silver, we still see a market that is caught in narrow Bollinger Bands, oversold, and in a downtrend. To negate the downtrend, you have to take out 1447. Because it's oversold, I don't expect that you're going to get a lot of protection of new selling in this market. That's going to be the difficult part. You know, if you see the stock market let go, do you get nervous about industrial metals? That's something you got to think about. In the copper market, you saw that at work today. What the copper market did is coming in, this is Tuesday's action. On Wednesday, we had an outside day down 260 points on the day. That gives you a pattern of lower highs, lower lows. The settlement of today was 278.05 under 278.37, let's call it. And the follow-through tonight is to the downside. The bears are in control unless you take out the highs of today, and that high was right here over my shoulder, 282.00, okay? But again, you're getting these new sells with an oversold market and tightening of Bollinger Bands. I'm always concerned when I see that. In the platinum, you're stuck at the 18-day average in a narrowing in of Bollinger Bands and a flatness of momentum. The market is looking for a reason to do something. And even in a bad day today, the palladium refuses to drop down to that 18-day average. It's been impressive. It's been working itself out of being overbought, but it's not out of it. Any reading in the slow stochastic over a 70, unless both numbers are going sideways over the 80s, but over a 70 is overbought. That's how I'm viewing the market. In the dollar index, this has got traders talking. They're looking at bond yields going up, and yet the dollar is stalled out. Now, the word is stalled. What we have now is a higher high, lower low. The upper Bollinger Band stopped the rally. You now are turning the momentum back to the downside, as you can see right through here. We'll see if it follows through tonight. Very confusing what's going on in that particular market. And as I said, and I don't mind saying it, even though gold is up with this big stock market break, very unimpressive rally so far. We'll see if it can improve from there. I want to remind you about my research because with it, you get my commentary, you get my twice daily recommendations as a free trial. Then you get the morning videos, which really set you up. If you like these videos, you're going to get hooked on the morning one because in those, I can actually say, buy here, sell there. This is what I think can be done. I really cannot say buy here, sell there in these videos, just not allowed because it's not a private video. Private means you need a user ID and password. That's how you get to my research. We would like to give you a free trial. Call my staff. You can go on our website to sign up for it, by the way, or you can click right up here if you see that icon, and that'll take you right there. I'm Ira Epstein. You have a good day.